the first keynote that we're going to go to. This is being hosted by the Think Center for Finance and Investments. Let me introduce Lori Santikian. Lori holds undergraduate degrees from University of California, Berkeley, a PhD in economics from Harvard University, is an adjunct associate professor in finance and strategy here at Anderson, and the faculty director of the Think Institute. And she will introduce our keynote, Dana Settle. So welcome to both of you. And Lori, over to you.
Gary, thank you so much. Hello and welcome everybody. Thank you for joining us this morning. We are absolutely privileged to be joined by Dana Settle, founding partner of Greycroft. Anybody who's familiar with venture capital knows how tremendously respected and admired Greycroft is in the industry. They are known for early investments in technology and media, and for backing diverse founders. Dana heads the West Coast office out of Los Angeles. She currently manages Greycroft's investments in many names that you know: Bird, Goop, Anina Bing, App Annie, Click, Comparably, Happiest Baby, Seed, Thrive Market, Versed, and Wide Orbit. So it's really just a wonder that she has time to even sit down with us today. She has also managed the firm's investments in several prominent exits, including offerings on the public markets and acquisitions by DreamWorks, Disney, LinkedIn, American Express, Cisco, and Nordstrom, just to name a few. She also serves as a board of director to IMAX Corporation. She holds a BA in Finance and International Studies from the University of Washington and an MBA from Harvard Business School. Welcome, Dana, and thank you so much for joining us.
Thank you for having me. I'm really happy to be here.
So let's jump right in. Venture capital plays an essential role in funding early stage business ideas and fueling innovation, particularly in technology. COVID, of course, has fundamentally altered the economy and how we do business, at least for now. What changes are you seeing in terms of investment activity in venture capital?
To be honest, we've not seen huge changes in terms of the investment pace. I mean, I would say, everything froze for kind of a month in sort of March, 15th to April 15th. But really, we've seen the pace accelerate. And I think what many are seeing and feeling, working from home, as nobody turns off anymore, it seems like the pace has actually accelerated. And we've actually made 62 investments since March, 18 initial checks. So, new investments and 44 follow-ons to our existing portfolio companies. And so, that is actually tracking ahead of where our investment pace was last year.
And so have you seen investors' risk tolerance change in this environment?
I don't think so. I mean, I think there's been some shifts in terms of sectors that, we all are focused on. Again, nothing that will surprise anybody, but I think with the shift to work from home, remote work, there's been obviously a huge emphasis in both the private and public markets on companies that are enabling and sort of improving the remote work experience. Zoom, which we're on right now, is an obvious one, but there's so many companies that provide lots of different components of that, ranging from sort of intra-office communication in a remote environment to tools that enable sort of more efficient collaboration across all different divisions. So the collaboration across developer tools looks different than what collaboration looks like across marketing, for example, or onboarding of new employees. And so, if you think about all of those things being done in a remote environment, and these are all trends that, were existing trends, and they've just been accelerated through this, through this time. So, that's been kind of one big bucket. And then the other is just the, big shift to e-commerce, away from, sort of physical retail. And so that's another, just big trend, again, ranging from the actual products and services, grocery in particular has been, a very large, or sort of food products in particular has been a large component of that. But, really, again, everything, all of the enabling technologies that support e-commerce.
Mm-hmm. So you mentioned we're on Zoom, everybody's working from home, and we've all been thrust into this world where most business is conducted virtually. And that's particularly difficult for building new relationships and for assessing sort of soft information about a founder or a business idea. Can you tell us about how you conduct due diligence virtually and how you build trust with founders that you're meeting virtually?
Yeah, it's funny. I mean, so I'd say in some ways, Greycroft, we have had an advantage because we started from day one. When we started the firm, I was in LA and my two partners were in New York. And so we've been kind of virtual from day one. Of course, we knew each other, we met each other before we started, so we've had that it's very embedded in our culture of the firm, is kind of being comfortable actually working on Zoom, working remotely. And we've invested, since inception, all over the country and really all around the world. In fact, we've actually made 3 international investments over the last 6 months. So it's something that we are comfortable with. And some of it's really the due diligence process and the, yes, doing a lot of these, probably doing more meetings, which can be sometimes painful. I try to mix it up between Zooms and going for walks and just being on the phone. But sort of doing more so that you do get a sense of people, like not just, one meeting, like we might, whereas in a sort of historically, we might do one meeting and then, invest in a seed company or something. It's sort of doing more than one. And then also, really doing our reference checking, which again, we always do, but I'd say we're probably overcompensating on diligence as it relates to references, personal, professional references, customer references. And, to me, that's actually all good. I mean, it's, again, it's sort of what we do anyway, but we're pushing harder on it because of the fact that we, are in this remote environment.
And do you think, please go ahead.
Well, I was going to say, I think one thing that we are very conscious of, and that, we're trying to be sort of extra cognizant of, is that we do have, again, an advantage from having done this. I've been doing this for 20 plus years, and, many of my partners as well. So we have big existing networks. But I think in venture, the new ideas come from new people and new networks. And I think also being really very intentional about making sure that we're not just going to sort of the same networks, but reaching out and actually reaching out beyond our networks to, networks that we haven't historically, been introduced to. And so that's something that we're paying a lot of attention to as well.
And so do you think some of the sort of extra diligence will be a shift that's enduring?
I do. And I think, we're doing a lot of things. Again, it's funny. I feel like the void is filled by more work. It's for better or worse. And I guess the good thing is that we love our work. So, we are, so a lot of the, diligence processes that we have done historically, I think now that we're really, we're actually revamping like all of our materials right now. So our deal qualification memos and, just really kind of codifying a lot more and making sure that, venture is an interesting asset class, because on the one hand, we're bucketed in with private equity, but, we're taking minority stakes and we have to move quickly. And so those two things, lend to sometimes, trying to sort of valuing moving fast over doing the diligence. And I'd say we're going back to being able to do the diligence, but we want to be able to do our diligence fast. And so what do we need to build in terms of tools, technology, and just sort of internal infrastructure to allow us to do that today and going forward.
Mm-hmm. So, it's easy to feel these days that the world is on pause and everything is canceled. But of course, ideas are building and being developed, and investors want to earn a return. You mentioned 62 investments that you've done since March. So you said 18 new and 44 follow-on. So can you tell us about any of those deals, and with specifically an eye towards, what lessons can be drawn by technology firms or really any other founders who are trying to raise money in this period?
Yeah, I mean, we really, again, we have historically, and we are now more than ever kind of leveraging our infrastructure. So, and I would say we are doing a lot more across our portfolio. So we're doing a lot more. We have a director of platform, and she has been doing a lot of outreach, connecting our companies together and doing sort of small session Zooms with 6 founders, for example, together. And then out of that, she's really sort of, paying attention and listening to what are the trends that they're seeing, and are there companies that she hears consistently come up that we should be, reaching out to, and or are there, just spending more time with our founders, finding out, I think the best source of new deal flow is almost always founders in our network. I think that great founders sort of beget great founders. And so we're really, spending a lot more time, sort of intentionally with the founders of a lot of our portfolio companies, and making sure that they know what we're, looking for. And so I think from the perspective of new entrepreneurs founding companies, that when they're looking to network into Greycroft or frankly any other venture fund, really focusing on who are the portfolio companies of the partner at a venture fund they want to get to, are there common connections, or is the product something that would resonate for one of those companies? Because getting a referral there is going to be such a strong, sort of source of kind of confidence for us. And that's where, one of our companies, it's a stealth beauty company. It's called Ami Collet, and it was referred by a founder that I've worked with multiple times, Catherine Power, who is, an LA-based serial entrepreneur. She's founded 4 companies. We've backed all of them. And it's an area that she has been, very interested in investing in personally. And so, when she met this founder, she just thought it was, perfect for her and therefore perfect for us, and sort of introduced it to us. And so we're part of that very early, pre-seed syndicate. We've never met the founder in person.
Interesting.
Mm-hmm.
So portfolio companies could be a good channel for sort of those who don't have a network to be able to access these sources of capital.
Definitely.
For the portfolio companies specifically right now, many are hurting, many are feeling all the uncertainties. How are you supporting them during this time? And you mentioned sort of 44 follow-on investments. So there's clearly a good sort of fundraising channel for those who are already networked. How are you supporting them, and how should we think about the financing landscape for portfolio companies in general that need bridge support right now?
Yeah, I do think this is, challenging times, as we learned in 2008, and for those of us who lived through that, and 2001, and sort of all of these different times, really great companies are sort of born out of these times. And I think that that's the it really, I've been just blown away by the strength and resilience of our portfolio companies, and just the sheer kind of entrepreneurship that has been displayed. And that's really what it is. At the end of the day, it's being able to to kind of find opportunity in what others, would see as being challenges, and really sort of coming out on the other side in a stronger position. And, so those are what we're really looking at. And, I think that I've always said, and actually a great entrepreneur said this to me once, and I now repeat it repeatedly, is, you should never start a company unless you can't not start it. And so I think we're getting back to that. I think that there has been a bit of it's been almost like a fad to start a company. And I think we're kind of getting back to reality where people are starting companies because it's like they just can't stop thinking about it. They wake up every day and it gets a problem they have to solve. And I also think there's a shift toward entrepreneurs and I think venture capitalists focusing on harder problems and bigger problems, as that's what we're faced with every day. And, again, those are actually really encouraging points to me.
Mm-hmm. I'm just going to remind the audience to submit questions on Slido, and at the end we'll have a chance to ask Dana directly. So you mentioned a few international investments that you've made recently. Has there been a shift in your geographic scope of investments because of remote working, or is that something that's pretty typical?
No, I mean, again, some of this and some of it goes back to existing networks, but one company called Sisu in Ireland, which is actually a serial entrepreneur that we had founded in a prior company, security company that he sold. And so, we are backing him again. And so that's one. I was trying to think of the other one. Is an Israeli company that we had already been talking to. So we did know had known the founder. And then another one was a follow-on, which is actually a Taiwanese company. So, I do think that for international opportunities where we don't know the founders, we'd certainly be looking to, and this is again part of our strategy, is we syndicate 100% of the time, meaning we bring other investors in, or look to partner with partners that we think bring something that is complementary to us to the table. And so particularly when we're investing internationally or in geographies that are outside of New York or California, we look for partners that are in those geographies.
Mm-hmm. So has this pandemic and sort of the parallels, the parallel environment that we see in sort of public equities as well as interest rates, if you take all of that together, has any of it changed your view on your next fundraise?
So it's interesting. I mean, I think that there is a big shift that's happening in venture capital in general. I think that there was the last, call it 10 years has been really sort of like the rise of the seed, and then they sort of called pre-seed fund, and thousands of sort of new seed and pre-seed funds have sort of sprouted up. I think that there is going to be somewhat of a consolidation there, and we're even seeing that now. And I think if you look at the funds that have been raised over the last 6 months, there are fewer funds and much larger funds. So the capital, the dollars that have been raised, you look at it and it doesn't look like it's that significant of a decrease. It may even be flat to last year, but in terms of the number of funds that it's going to, it's a much smaller group. Mm-hmm. So, as we sort of think about what that means for the future, we do believe that, to be a very successful, venture fund, you need to be able to provide full life cycle investing. And that's something that we moved toward. We started with a seed and Series A fund in 2006 and 2000, geez, where are we now? 2014, we raised our first growth fund, and growth for us was kind of Series B and beyond. And now we really do invest sort of full life cycle, all the way through IPO or exit, from, seed Series A out of our early stage fund, growth fund, sort of Series B and beyond. And then we've done, a series of special purpose vehicles for kind of pre-IPO or very late stage financings. So, I think that is going to be increasingly the case as we see competition coming from public market investors, hedge funds that have sort of started to move down market, corporate VCs, and also, frankly, the large, I'll say sort of asset managers. I mean, in the, sort of Blackstones of the world who have multi-asset class strategies, but are, all definitely sort of moving down into venture. And so I think it is increasingly the case that you'll need to be able to sort of support the full life cycle.
Mm-hmm. So on that topic of full life cycle, sort of from early stage to exit, we've been watching not a lot, but we've been watching a few public exits these days. So we, of course, saw Snowflake and its dramatic IPO. As we know, Palantir and Asana are debuting today. They were direct listing. Airbnb had sort of pivoted from planning a direct listing to now doing a more traditional IPO in the near future. What are your thoughts on the exit market right now, and how is that impacting venture capital finance?
Well, I do think, any venture capitalist knows, I mean, when the IPO window is open, you sort of do need to at least contemplate it. We have had one IPO actually in the last 6 months, company in Chinese company that went public in Hong Kong called Ika, which is a mobile payment platform in China. And we have 3 more companies that are preparing to go public in Q1 of next year, or possibly Q2. So, I think that there's definitely a move toward being ready when the market's ready. And, frankly, right now, I think that the public markets are holding up because there's not really anywhere else for money to go at scale. And so I think that's the interesting thing. And, I think based on, I sort of read your economic outlook, and I think the big assumption around the ongoing stimulus really is the big assumption. And if that doesn't happen, sort of what does that mean for the public markets? And I don't think, at the end of the day, yes, on the margin, are we pushing our companies that are far enough along and could be public companies today? I mean, we have a number of companies that are public scale today, and on the margin, we're certainly encouraging them to be considering it. But we're also long-term investors, and so when we're investing in a company at the seed stage, the state of the public markets today is probably not going to be the state of the public markets when they exit. So, we take it into consideration. We're always looking at multiples over a long period of time. We're not looking at just the multiples today, because the multiples today are at all-time highs. So, long-winded answer to your question.
Well, let me ask you about something that I know is very near and dear to you. I mentioned earlier that Greycroft is known for backing diverse founders. And I'm curious, what do you see as the venture community's role in creating opportunities for a more diverse set of founders and investors? You've mentioned networks and how it's so important to be networked to be able to just access these opportunities. So, what concrete efforts do you think venture firms need to make in order to make opportunities more accessible?
I think the great thing about venture capital is that, what starts small can build to become large fast. And so I think that's where we do have a special role and a special opportunity in, potentially driving some meaningful change. We have historically both invested in and hired I'd say relative to the rest of the venture community, a disproportionate number of female founders in particular. I think that's a function of a fund that started with a female founder from the beginning. I mean, I think, and what we're really focused on is just making sure that as a firm, we continue to drive investment in hiring ourselves and really sort of diversifying our cap tables and syndicating to diverse groups across the board. And so, if we look at our firm, for example, 55% of our employees are women. And we do, I don't have the data in front of me, but we do have, again, a higher percentage than average of our investments have gone into female and diverse founders. We, as a firm, are taking a number of concrete steps and mostly just continuing to shine a spotlight on the opportunities for investing in diverse founders. So this is kind of the networks, but then sort of like breaking open the networks. So that's why, when I sort of think about our founding teams and really talking to them about the fact that, yes, we are, looking to network outside of our kind of insular networks. And, how do we please introduce us to people that come to you, whether they're diverse founders, great ideas. We want to see it all and sort of making ourselves as open as possible to those ideas. The other, so a few concrete things that we're doing. We actually launched a fellowship program this fall in conjunction with a group called MLT, Management Leadership for Tomorrow, where we are, this is for the first time, we're bringing on 2 undergrad fellows every quarter. And we just started with our first 2 weeks ago. So virtually, so far it's great. And they sit in on our Monday meetings. And we have sort of a whole series of work that they do where they get full exposure to the venture capital sort of life cycle of investing, doing due diligence, being part of that process. But, also we're bringing in speakers and sort of speaker series within our firm and also our LPs and entrepreneurs to provide real full exposure. We believe that that's a really important piece of developing a pipeline and opportunities. And the second thing that we've done is there's a rider that was developed by actually a LA-based investment professional, Alejandro Guerrero, who is is a co-founder of a firm called Act One Ventures, and he essentially developed a rider for venture funds to adopt that say that we will agree to include a diverse fund in every company that we lead, where we lead the investment. So, and so we signed on to that sort of from the beginning. And again, it's these, they're sort of small steps, but what we've seen, even, just even as we were talking about doing it within our partnership, and then when we actually signed on to it and now include it in our term sheets, is that is a forcing mechanism to expand your network. So, you've written a term sheet, you get it to the entrepreneur. By the way, the entrepreneurs are thrilled to see this because this is something that I think all founders know, that they need to be developing diverse teams. And so this is something that we, can concretely do. But for us, it sort of forces you to stop. Instead of just sending it to, your buddy at this firm or your, when syndicating, you really think about who is the best person that we can bring into this syndicate that is going to provide a different perspective than the perspectives that are around the table. And so that's been a really meaningful, change to our process, and I think has the potential to really be impactful. And then the third thing is board opportunities. And, boards are really an important part of corporations and corporate governance. And we believe that if you sort of start from the beginning at the earliest stages with good corporate governance, with diverse boards, again, diverse inputs sort of from the top, that will drive companies to make the right decisions in terms of, hiring plans and having, equal pay plans, and really, again, sort of building it in from the foundational level. So we've been developing a database of board ready candidates for our portfolio companies to get experience on private company boards and grow with those boards, and then, be board ready for public corporate boards as well.
It's really terrific because, a lot of companies make statements, but they're not backed by concrete actions. And so, these concrete actions as it relates to developing a pipeline on the investment side, and then developing kind of a broader view of founders and then the board could really make an impact on making a shift in the industry. Do you, excuse me, do you have a sense for what the threshold is for there to be a paradigm shift in the industry? Sort of how many generations will it take? What will it take for it to sort of, not just be a marginal improvement, but actually be a paradigm shift?
Yeah, it's a good question. I mean, I think I'm a venture capitalist, so I'm an eternal optimist. And, to me, it's sort of, you just keep taking steps. You just keep taking steps. And I think there's a little bit of a blind faith belief that change will take place. I've seen it in my career. I mean, I've definitely the number of female founders that we see come in, the number of diverse founders that we see, sort of come through, has increased dramatically. And my personal belief, and this is something that I've been sort of pushing on a lot, is that we need really, and this is why I like the full life cycle investing is important to me. We really need more companies to go public. I mean, I think where you really that's where you sort of, you have the visibility of diverse CEOs. And so the Real, which went public last year, was founded by a female founder. Her team is completely diverse. She has a, fantastic sort of track record, and created a lot of wealth, for the executive team. And I think that's where sort of the wealth creation component of it happens at a greater scale. And that has, the potential impact. But it's also the visibility and sort of seeing people that look like me doing something, so that it does make it seem more achievable. And so I really, we have another portfolio company that you didn't mention, but that I'm particularly excited about, Bumble, which is another female founder. And there's been rumors that they'll look to go public next year. And I certainly am beating that drum, because I really hope that that's the case. I think that, again, another really great sort of example of a female founder that sort of took, it's an amazing story. I won't go into it now, but really sort of took things into her own control, and now is the CEO of the broader group, and I think has the potential to make a real impact.
So it's an interesting point that when companies go public because of the wealth creation, it almost creates opportunities for new angel investors, right? And that helps sort of broaden the pool of capital that can flow.
For sure.
One question from the audience about ESG. So to what extent do you look at ESG in your due diligence process or in other stages? Does it have any influence on the decision at all? What kind of role does it play?
Yeah, so it's across the board, and that's where, when it's part of why we're actually building some of these things into our term sheets, et cetera. I mean, because, when we're investing at the earliest stages, a lot of, founders, when they're starting, some are thinking about it, but some need to be educated. And I think that's a role that we can really play. As it relates to, I will tell you, as it relates to consumer products, and, any sort of kind of consumer product investing, ESG has to play a significant role. I think that if you're starting a consumer product company today and you're not taking into consideration ESG to sort of its fullest extent, actual sustainability of products, but also of the organizations themselves, I think consumers will vote with their feet. So it's a sort of must-have. I think in enterprise companies, again, it's the employees are sort of voting with their feet. So we think it's a must.
So just two more questions to wrap up. So you yourself are a rarity in venture, right? The vast majority of venture capitalists with your stature are not women. And I mean, that your career and influence are super impressive to begin with, but that makes it even more impressive that you've managed to reach this position despite lacking as many, as you said, sort of models of, or being able to have a vision of, yes, I can do this too, because I've seen many examples before me. So as an example that sits before many aspiring investors and young women or other sort of underrepresented populations, including minorities, looking to become investors in this space, what advice would you give our students for how to break in and sort of how to navigate their career? Just starting with breaking in.
Yeah. It's, I mean, I think, look, I'm so blown away by, well, first of all, I mean, these two fellows that we have, I'm so blown away by them because, I mean, when I was a junior in college, I was not one, 10th as articulate or thoughtful about, sort of the world and investing in the things that they've already been thinking about. So I think what's so exciting about the world today is there's so much information that exists. So, I mean, I would start with really, I mean, educating yourself as much as possible. I mean, there are really great resources out there. I mean, if you're interested in venture capital and private investing, I mean, like, go onto Crunchbase and just like read everything there is to read. There's so much information out there on, sort of private companies. I mean, we're an investor in, but Axios, is really an incredible email newsletter and, website that has just does great coverage of all things in, venture capital. Dan Primack is, one of the, I think just leaders in the, market. So just doing the research, really understanding it kind of, and then there's, again, so many more resources available. I'm part of an organization called All Raise, which is really focused on bringing women into the venture capital community and entrepreneurial community, Black VC, Latin VC. I'm on the board of the NVCA, the National Venture Capital Association, and they have an organization called Venture Forward that has, all of these have so much by way of sort of educational tools, et cetera. And so, I think educating yourself and then, reaching out, and there are opportunities for fellowships, internships, both at venture funds and also at portfolio companies of venture funds. And I think it's critical to walk in the shoes of an entrepreneur if you want to be a venture capitalist. So, I think there's a lot, there's really is a lot out there. And I think just jumping right in.
That's excellent advice. Just to summarize, what keeps you up at night as a venture investor, and what do you feel hopeful about?
What keeps me up at night right now is like completely existential. I mean, it's not existential. It's very in our face, unfortunately. But yeah, I mean, I think that, we're sitting in the middle of the, three biggest issues that could possibly sort of, face us in terms of the sort of political environment and what's happening, the environment and what's happening, and then, social justice. So I think, these are massive problems that need to be solved. They need to be focused on. And if, I think one of the great things about this country has always been having a relatively stable system. And with a stable system, we're able to, invest in startups that can, sort of flourish and people can take risk. So that keeps me up at night. In terms of opportunity, I just think humans are fundamentally resourceful, and I have like incredible hope for humankind, and that there will continue to be great entrepreneurs everywhere and great ideas that will help solve a lot of these really big problems, and I hope to be a part of them.
Well, Dana, thank you so much for taking the time to share your insights with us. It's been an honor and a privilege. Thank you so much.
Thanks for having me.